Hey, what's up, future CPAs? Welcome. If you're gearing up for the LCPA, you know every single question matters. So today, we're going to do a deep dive into a topic that seems super easy, but is actually packed with tricky situations that could totally trip you up. We're talking about cash accounting. Let's get you prepped. So let's be real. You see cash on a problem, and you probably think, phew, easy points, right? Well, that is a classic trap. The board exam loves to test you on the weird stuff, the exceptions to the rule. And mastering these advanced cash concepts, it's not just about scoring a few extra points. It's about leveling up your mindset to think like a real CPA. So here's our game plan for today. We're going to hit 3 of the absolute toughest cash scenarios: dealing with foreign currency, figuring out who really owns the cash, and what to do when a bank goes under. Then, to make sure all this actually sticks in your brain for the long haul, we'll finish up with some killer retention hacks. Okay, let's jump right in. To make all this stuff make sense, we're going to follow a case study. So, meet Pixel Play Studios. They're a new game dev company right here in the Philippines. Business is booming, but they've hit 3 accounting roadblocks that are like perfect examples for the LECPA. Okay, first problem. Pixel Play's new game is a massive hit in the States, and they just got a payment for $10,000. Awesome, right? But for their accountant, it's a puzzle. How in the world do they report this on their Philippine financial statements? Next up, Pixel Play hires a bunch of freelance artists. And to make things simple, they basically act as a middleman. They get the money from the publisher and then pay the artists. But this brings up a huge question. That cash that's just sitting in their bank account, is it really their cash to report on the balance sheet? And for the grand finale of their problems, Pixel Play was smart. They didn't put all their eggs in one basket. They used a secondary bank. But now rumors are flying that this bank is in deep financial trouble. The cash they have in there, it might be at risk. What's the accounting move here? All right, let's break down problem number 1, that big payment in US dollars. The whole game here is converting that foreign currency into Philippine pesos for the balance sheet. But trust me, it's not as simple as just using the exchange rate from the day the cash landed. And here's the core of the problem. When Pixel Play got the 10 grand, the rate was 55 pesos to the dollar. Simple enough. But by the time December 31st rolls around and they have to prepare their reports, the rate has jumped to 58 pesos. That's a pretty big difference. So which rate do you use? So check this out. Here's how the rule actually plays out in the numbers. Initially, you record the cash at the rate on the day you got it. But, and this is the absolute key for reporting, you have to remeasure that foreign cash using the rate at the reporting date. In this case, that creates a 30,000 peso gain, which, by the way, goes straight to the income statement. So here it is, the big takeaway you have to burn into your memory for the LECPA. Cash in a foreign currency is always valued using the closing rate. That means the exchange rate on the reporting date. No exceptions. Got it? All right, let's move on to problem number 2, that money Pixel Play is holding for its freelancers. To figure out if this cash belongs on their balance sheet, we have to use this really powerful concept in accounting called the control test. It really all boils down to one question: who's actually in charge of this money? And this quote from the AICPA nails it. It's not just about whose bank account the money is sitting in. It's about control. If you don't control the economic benefits, if you can't use it for yourself, then you just can't call it your asset. So, how do we actually figure out who has control? Well, it's not just a vibe. We have a practical checklist. You gotta ask these 4 questions. 1, does Pixel Play legally own it? 2, can they take that money and, invest it for themselves before paying the artists? 3, if Pixel Play went bankrupt, could their creditors get that cash? And 4, if something went wrong, are they on the hook to pay the artists out of their own pocket? So the answer becomes super clear. If the answer to those questions is basically no, which for a payroll situation it probably is, then Pixel Play doesn't control the cash. They're just holding it. It's not their asset. It does not go on their balance sheet. That distinction is absolutely critical. Okay, time for our final and maybe most stressful problem. What happens when your cash is stuck in a bank that might be going down? This is one of those emergency situations where you have to know the exact accounting rule to follow. So if you're in the exam and you see a question mentioning a bank in financial difficulty or going bankrupt, a little alarm should go off in your head. Because that money isn't just normal cash anymore. Its whole identity has changed from an accounting perspective. And here's the rule, plain and simple. The second that cash gets trapped in a closed or failing bank, it is no longer cash. you have to reclassify it. It becomes a receivable, basically a claim you have against the bank. And you can't just list the full amount. You have to write it down to its estimated realizable value, which is the amount you realistically think you'll ever see again. Phew, we did it. We solved all 3 of Pixel Play's accounting nightmares. But now comes the important part. How do we make sure you don't forget all this a week from now? Let's install these rules into your long-term memory so they're ready to go on exam day, even if that's years away. Okay, you might want to screenshot this. This is your ultimate cheat sheet. 3 tricky situations, 3 straight-to-the-point answers for the board exam. Got foreign cash? Use the reporting date rate. Holding cash for someone else? Use the control test. Cash in a failing bank? Reclassify it as a receivable. That's it. And to make it stick even better, let's use some brain hacks. For foreign cash, just remember this phrase. Current is correct. You always use the current or closing rate. For client funds, just ask yourself the simple question, can I control it? And for cash trapped in a bank, think of it as a promise to pay. And what is a promise to pay you? That's the definition of a receivable. Easy, right? So we're at the end. We've totally proven that even the simplest looking account, cash, has some serious hidden complexity. And that leaves me with one last question for you to think about as you study. What other simple accounts, like receivables or inventory, are hiding tricky rules you need to lock down before you take the LCPA? Keep digging. You got this. Good luck.